What's going on? It's Gary from fitnessfirstnutrition.com. Please like, comment, share, subscribe. And today we're going to be talking about a pretty important topic today. We're going to be talking about healthcare, how healthcare companies are ruining lives. They are not in the best interest of the people, and they're essentially robbing people and also causing families to lose loved ones and making a lot of money while they're doing it. So we're going to cover it. I was scrolling, I want to say on Instagram, and I ran into something and it took me down a rabbit hole. So follow me and let's see what's going on out here.
Paying cash for doctors or medical procedures, but it can actually save you money. 10 News anchor Brittany McGraw has a look at why some are choosing to not use their insurance.
Most of us wouldn't dream of walking into the doctor's office and not pulling out our health insurance card, but there are some cases when pulling out cash would be a better option.
So we always think of medical insurance as it's better to use because when we get the bill at the end and we see how much medical insurance covered, and then we see what we have to pay, we say, oh damn, it would have been $5,000. I only have to pay $500. Oh man, I'm lucky. I only have to pay $1,000. All right, great, good thing I have medical insurance, but things are not always what they seem.
Give me a big With the increasing number of people in high deductible health insurance plans, Consumer Reports says some medical providers are offering discounts, sometimes deep discounts, to people who pay out of pocket.
It sounds counterintuitive, but it's true in some cases.
A company like MD Save even pulls together hundreds of doctors, hospitals, and labs across the U.S., offering discounts to people willing to prepay their bill. It's a practice more common for diagnostic procedures like x-rays and CT scans and even ultrasounds. But the financial team at Consumer Reports found many medical services, including pharmacies and even some outpatient surgeries, are offering discounts if you leave your insurer out of the picture.
But you have to be careful. It could cost you more in the long run. That's because when you pay out of your own pocket, that money will not be applied to your deductible or your out-of-pocket maximum. If you need a lot of healthcare later on, you could be starting from zero.
Consumer Reports says it's important to run the numbers and then decide what's best for your family. But no matter which way the numbers fall, don't skip having health insurance. Brittany McGraw.
So for people who don't know how health insurance works, you have to pay. You have a set amount. Number one, you pay every month. You pay every month for your medical coverage. You pay your premium. So you pay your premium every month, and then you have a deductible, which is a certain amount that you have to pay out of pocket before the insurance starts to kick in. So if you do self-pay, then anything that you do, if it becomes like a major problem and you need long-term care, none of the money that you self-pay will go towards any of the deductible. So you'll be starting from scratch. But if you don't need long-term care and it's not anything super serious, then you make out better just paying out of pocket, which I've heard before, but some of these breakdowns, they elaborated a lot better. So we're gonna go over to another clip that I saw as I went down a rabbit hole. So where should we go next? Come here.
Her husband, Val, called me and said, I want to tell you a story.
That's Steve Cohen, the lawyer for the Valentini family. Kathleen was a retired teacher living in North Carolina when her hip started to hurt. After it didn't go away, her doctor ordered an MRI, but the prior authorization was denied.
The insurance company said the MRI was not medically necessary. The appeal.
Now, I want you to remember this because another video that we're going to watch, either next or the one after next, is going to let you know why this pre-authorization was denied.
Of the denial of the MRI took 5 weeks, and Kathleen finally got the MRI. And when she did, it showed that she had a fast-growing sarcoma, a cancer, in her hip.
Kathleen saw an oncologist, but the 5-week delay meant that the cancer had spread. Instead of just needing chemo, she needed to have her entire leg amputated, all because of her delay in getting a prior authorization. As we looked into it, stories like Kathleen's seemed all too common. The American Medical Association found that 80% of doctors report that patients have abandoned their treatment because of the prior authorization process. 19% say they've led to life-threatening events or required an intervention to prevent permanent impairment or damage. And that's exactly what happened to Kathleen.
And her husband could not believe that an insurance company had the power to overrule the doctor's recommendation.
Most shocking, however, is why the insurer said that the MRI was not medically necessary. In Kathleen's case, it meant that she hadn't done an essential step before getting an MRI. She never went to physical therapy, except she did.
The doctor said, guys, not only should you finish 6 weeks of physical therapy, you paid for it.
Insurance companies claim that prior authorizations save patients from unnecessary procedures and prevent fraud. They also...
So what they're really saying is that it prevents them from having to pay more money.
Claim they adhere to clinical guidelines set forth by professional organizations of doctors themselves. In cases like Kathleen Valentini, we wanted to know, are insurance companies just lying? And who's doing this? Like, who is the person who sits down and sees Kathleen Valentini's record and decides to just hit denied? So we talked to someone who might know.
I had teams ranging from 4 or 5 people all the way up to 20 plus reporting to me at different times. I was on the business operations end of our organization.
This is Max, not his real name or voice, who worked at a company whose whole business was prior authorizations. Oftentimes, insurance companies can't handle the sheer amount of requests, so they outsource the decisions to a company like Max's. It wasn't actually Kathleen's insurer, Emblem Health, that denied her MRI. It was a company that Emblem Health had outsourced their prior authorizations to. Max was quick to defend most of the nurses and doctors reviewing prior authorization requests. What he described instead was systems designed at all times to look like they were simply adhering to best practices. But that stripped employees of the ability to practice good judgment. Instead, companies like his used hostile design to push the kind of large-scale outcomes they wanted.
There's not a whole lot of room for subjectivity in some of these tools. And so, like, I can't check that box or I can't fill in an answer here. That might be enough to fail that clinical algorithm.
So I want to ask, for Kathleen Valentini, do you have any guesses as to like why that might happen?
I mean, only speculating here. But they might not have entered all the information inappropriately, or it might not have been explicitly called out in the place that they would have expected to find it in the clinical documentation, in the clinical notes.
To summarize, if Kathleen's doctor didn't write that Kathleen had already done physical therapy in wherever some anonymous doctor was expecting to see the words, patient did 6 weeks of physical therapy, the insurance doctor, rushed for time, might have overlooked it. Had Kathleen's doctor placed that crucial component somewhere else and maybe circled it with some big arrows or not had to do a prior authorization at all, Kathleen might not have lost her leg.
When you say like they're basically doing things that are just short of fraud, like what do you mean by that?
It's almost like selective design in terms of, do you want to word this question in a tricky way that maybe makes it a little bit more difficult to someone not paying close enough attention, and then likely leads to them not getting an easy approval.
But while Max consistently stressed how their decisions were supposedly rooted in best practices, story after story from doctors highlighted a system that was comically inept when it wasn't just outright horrifying. Dr. Calderia once ordered a mammogram for a patient with a carcinoma. The insurance initially rejected the prior authorization after a worker didn't understand basic medical terminology.
The person who is reviewing this case didn't know that carcinoma is also cancer.
In another case, Dr. Calderia looked into it.
How did you get the job? I know I've never worked in a hospital a day in my life. I mean, I've studied, medicine and medical terminology and practices, but I've never worked in a hospital. I don't have a degree. I'm not a doctor. I know what carcinoma is. How the hell don't you know what carcinoma is? You should need to know basic medical terms because people's lives are at risk. So I wonder if they're able to be sued, because nobody ever speaks about that. I wonder if anybody's able to be sued for neglect, being knowingly or unknowingly.
A doctor who kept rejecting her submissions. She had found he switched to insurance after receiving a multitude of complaints against him to the medical board. Others just seem not worth the effort. One doctor complained on social media about needing a prior authorization for a cheap blood pressure medication that only costs a few dollars a month.
I just got a prior authorization from United Healthcare for Lisinopril. I hope the whole board at United Healthcare gets diarrhea tonight.
Steve Cohen has one answer to make sense of all this.
And United Healthcare, I'm going to close this one out. So United Healthcare is the company where the CEO was followed and he was unalived by Luigi. I'm not sure of Luigi's last name, but Luigi, who's currently imprisoned at the moment. And I think on a bullet, he wrote the 3 Ds, depose, denial. I can't remember the other D, but we'll cover that later. That will come up again later. But he wrote that on there because those are the common practices of the insurance company to get out of having to pay for providing you with healthcare. But we're going to watch one more video before we get to the main video.
To let me know that my mom's Aetna Medicare Advantage plan wouldn't cover her stay anymore. Our only options were to bring her home. She could barely walk and was on an IV drip, needing constant medical care, or to get rid of her Medicare Advantage plan and switch back to regular Medicare. The basic public plan would have paid for her continued stay. That didn't make sense to me. Medicare Advantage is a privatized.
Now we're talking about Medicare right now. Medicare is what you receive once you turn 65 years old. It's when you have a paycheck. That's what comes out of your paycheck. If you look on there, you'll see Medicare every week, every 2 weeks, however often you get paid. You'll see $100, $200, how much ever money you make, $300 coming out of your paycheck. And that goes towards Medicare, which is supposed to cover you once you get older.
As an add-on to Medicare that was supposed to provide better care. It ended up not mattering. She died before Aetna could throw her on the street like they wanted to. Medicare Advantage is just one part of our broken system, but I want to use it as an example of why things are so broken. You might think you already get it. The American healthcare system sucks and is far too expensive, but it's not just because it's not free. We're going to look at where all this money is actually going, how a surprisingly influential vinyl record drop from an unexpected artist helped get us here, and who we're now depending on to fix all of this. When you get old enough, 65, you're eligible for Medicare. Medicare has 4 parts, A, B, C, and D. All 4 parts make up about 10% of the federal budget. Medicare Part A is completely free. It's what you paid for in taxes for working all those years. It covers hospital visits. Medicare Part B is an optional add-on. It costs around $175 a month. It covers preventative care and necessary procedures. A and B are fully administered by the government, and the vast majority of their budget, that's taxpayer money and that monthly payment for Part B, are spent on actual care, 98.6%. The other 1.4% goes towards paying for the people who literally work for Medicare, processing paperwork and whatnot. Then there's Part C. Medicare Part C is also called Medicare Advantage. It's an alternative to traditional Medicare that replaces Part A and B with one plan. Medicare Advantage is not administered by the government. It's administered by everyone's favorite entity, private insurance companies, who get paid by the federal government.
So private insurance is a company. If I started a company and I provided insurance, health insurance to people, I would be a private insurer. Their job is to make money. So my job is to make as much money as possible. You as the consumer, you want to pay as less or least as possible. So we have conflicting, my success is your failure and your success is my failure. I want to get as much money out of you as possible. You want to keep as much money in your pocket as you can. So we have a conflict of interest, should we say.
Government and a monthly fee from the elderly person being insured. Medicare Advantage is heavily advertised, using all of the elderly's favorite celebrities.
Hi, William Shatner here with an important message about your Medicare benefits.
The ads use Medicare branding to convince seniors these plans are more connected to real Medicare than they are. Images of healthy, active seniors, and promises of lower out-of-pocket payments and more coverage. They don't include important information like plan quality ratings or the other hard facts about coverage. They even go further and offer gift cards and other financial incentives to sign up, like a timeshare or something, which the elderly also love. Since my mom's gone, I have to help with a lot of my dad's healthcare. I've noticed that when I go to refill his prescriptions at CVS, which owns Aetna, the insurer, they have a little quiz, like an evil BuzzFeed, where you can determine what Medicare plan is right for you. And it seems like no matter what I input, it always gives me an Aetna Medicare Advantage plan. That's the same one my mom had when she was denied comfort and dignity in her final days. Care, which again, the basic Part A or Part B would have provided for her. And they want everyone on this plan. Imagine Medicare Advantage for all, where any hope of a more equitable plan is scrapped to funnel more money to the insurers. It's not just my family, obviously. Since the advent of Medicare Advantage as we know it today in 1986, the amount the United States spends on healthcare has more than quadrupled. Medicare Advantage and much of our modern healthcare problems exist because of not one, but 2 versions of Ronald Reagan. In the late 1950s, a fully government-funded healthcare plan for the elderly was actually a possibility. Congress saw 2 bills that put forth plans for national insurance programs for everyone receiving Social Security, the elderly, in exchange for a small increase to Social Security payments. Early versions of the bill saw the plan as mandatory, but an alliance between private insurers, the American Medical Association, and others who profited off the existing system, which was already predatory, did not want to see that happen. So they released a secret weapon, Operation Coffee Cup. A key element of the campaign was this vinyl record. The AMA drafted who was then just a young actor to record Ronald Reagan speaks out against socialized medicine. The record was sent out to doctors' wives, it was 1961, okay, to play for their friends to convince them not to support the healthcare bills, like a Tupperware party for predatory privatized medicine. The record attacked the plans for being controlling.
And pretty soon, your son won't decide when he's in school where he will go or what he will do for a living.
This is what we call propaganda. It is used to push agendas that people wouldn't typically agree with, that you want them to agree with.
But with an important change. It wasn't mandatory. That left a lot of power with private insurers. Then, as president, Reagan signed the Tax Equity and Fiscal Responsibility Act, which made a few changes to that existing Medicare program. Importantly, it made it legal for Medicare to contract with private insurance companies. So in the 60s, actor Reagan gave the industry the gift of making Medicare optional. And in the 80s, President...
That is, again, selling the people out. I'm not that big of a fan. I'm not a huge fan of the government. But to take a state program or federal program and then to put it out to a private organization that you know is just in business to make money, because that's what, in all fairness, this will be the last fairness that they get. Their job is to make money. Now, they do unscrupulous things, unfortunately, to make tons and tons and apparently trillions of dollars now, but that is their job. So this should never cross with that. The federal Medicare program should not cross into private insurance. Shouldn't happen.
President Reagan gave them access to even the folks who were on the government plan. That bill allowed for the creation of Medicare Part C, which eventually became Medicare Advantage in 1996. Since then, we see a lot of the same arguments about why privatized insurance and healthcare is better than public. They said a government plan would be more expensive. They said it would destroy choice and give worse quality of care. And they dropped what was the scariest word of that century: communism. Universal healthcare would be using your tax dollars to support other people, they warned. Medicare Advantage, specifically, shows why each of those arguments is total bullshit. One is the expense. Does Medicare Advantage, adding privatization to a public plan, save anyone money? Well, no, it's costing taxpayers way more. Most estimates find that Medicare Advantage plans cost the taxpayer between $300 and $1,400 more per patient than traditional Medicare. And that's when the plan's working as intended. One study found that just the amount of corrupt overcharges that Medicare Advantage charges the system costs taxpayers more money than all normal Medicare programs combined. In the next few years, Americans are expected to pay nearly $1 trillion in taxpayer money for overpayments. That brings us to choice and quality of care. If it's that expensive, it must be better, right? No. Medicare Advantage denied more prior authorization requests and more necessary care than Medicare, especially in rural hospitals.
And remember how important prior authorization is, because you may not be able to get that MRI, that colonoscopy, that get your prostate checked, you get checked for cervical cancer until it's 5 months, 5 weeks, 5 months, who knows. And when you're dealing with a rapidly progressing disease, time is key. You have to get the ball rolling and start getting in there and fixing things as soon as possible, because when cancer, we're just going to use cancer, it could be anything, but when cancer metastasizes, which means it starts going from one place to another, it becomes even more complicated to fix. It becomes more of a problem, and your chance of surviving it just lowers.
And this study reads, nearly 15% of the 5.6 million denials, that's a full $150 million in denied spending, was attributed to Medicare Advantage policies that were more restrictive than traditional Medicare's coverage rules. Medicare Advantage provided demonstrably less care than normal Medicare. That's exactly what I saw with my mom. She needed a place to stay with medical assistance while we planned for her cancer care. Aetna Medicare Advantage said no, whereas normal Medicare would have said yes. And they're also more restrictive in where you get your care. Medicare Advantage plans often have a much smaller network of in-network doctors than regular.
So let's be clear. So from the beginning, it started out with him saying his mother was put out of the hospital because her plan didn't cover her hospital stay after a certain point. So you have Medicare A and Medicare C. Medicare A is by the federal government. Then you have Medicare C, which is the private insurance. So she has C, which is the private insurance. Her private insurance wasn't covered anymore, so she had to leave. But if she would have just stayed on A, which you don't pay anything extra for, and A is what you paid into the program over the course of your life, your work life, she would have been able to stay in a hospital as she was dying. And let's not lose sight of the fact that she was dying from cancer.
Regular. And the government control thing? Well, guess which health system in the United States has the best customer satisfaction? Veterans Affairs. Vets are very satisfied with their VA healthcare, and that's a totally government-run program. They deserve great care, but it's proof that even in America, government care can work. And then there's the whole communism thing. The critics ask, why should my tax dollars go to support someone else? Well, with Medicare Advantage, they are supporting someone else. Remember that stat from earlier, that the actual administration of Medicare is only 1.4% of the cost? For Medicare Advantage, it's 10 times that, 15%. And that's in large part due to executive salaries and profit margins, because this is a for-profit business that needs to make a profit. Sure, government programs can see corruption or incompetence, but if everything works as it's meant to, their purpose is to serve you. The purpose of private insurers is to profit off of you. That can come at the cost of providing you less care or overcharging you, either through premiums or tax dollars. Medicare Advantage isn't the only problem in our healthcare system, obviously, but the many failures of the program are emblematic of what a privatized system looks like compared to a public one. Costs aren't rising because of any technological or other miracle advances that are saving lives. Between 1999 and 2021, the average cost of a hospital stay in America increased 161.7%, far outpacing inflation, without any significant increase in life expectancy. And that's for all the same reasons Medicare Advantage is broken. For-profit companies have devised ways to skim more and more money off of the ill and the taxpayer. We have a new administration coming, led by a man who supposedly...
So we're going to get into the main video. This is also the longest video, but it's the most informative video. And it's going to cover pretty much all 3 topics. This guy actually owns... he owned a pharmacy. I think, well, he's transitioned his business model because he says it's pretty much unprofitable to run a pharmacy anymore. He also said it's pretty much not as profitable to be a doctor anymore. And this really will get into a big problem in the healthcare industry with medical insurers just lowering the standard of care for patients and just prioritizing profits over lives in healthcare. So let's get into it.
The onset of these procedures and surgeries. So it's pretty nuanced.
It is. And I'm going to ask a ton of dumb questions because I'm uninformed.
Yeah.
What's the difference between an HMO and what?
Oh, but this is off of Tucker Carlson's channel, and the guy he has on is Brandon Bowler.
Like pre-1980s health insurance.
So prior to the 80s, your doctor knew you. They knew your family. They showed up with their little leather bag. They knew everybody in the family. They spent time with you. In the system we have today, because the insurance companies control the doctor's reimbursement rates, the clinician only spends 6 minutes with you on average here in the United States. And in 6 minutes, how can they possibly uncover the root cause, talk to you about family history, diet, lifestyle, nutrition, which they're not trained on in the first place? So it created an issue with the ability to prevent chronic disease is one section of that. But the other end of that is once these insurance conglomerates got a hold of our healthcare institutions and took over, they began to profiteer off of the chronic disease. So it's not just where it gets very, very complicated. And what people don't understand, Trump actually yesterday announced that he was going to break up PBMs. And when I talked to Bobby Kennedy, I was walking him through the PBM and what it is. So many people say these middlemen, or even when I did Bobby's podcast, he said, what is a PBM? I have insurance, not a pharmacy benefit manager. And I said, you have a pharmacy benefit manager that claims that it outsources your drug coverage to a PBM. But the truth is, they owned the PBM. It's like Scooby-Doo. So you pull the mask off and it's like, oh, it was Mr. Rogers all along.
So PBM stands for Pharmacy Benefit Manager.
Pharmacy Benefit Manager. And they were established in the 70s to be an advocate for the American people to drive down the cost of prescription drug care. Their job was to negotiate on our behalf to drive down the cost of our medications.
Yes.
And along the way, as the insurance companies became a for-profit institution, guess what they did? They went out and they gobbled up all of the middlemen. So the pharmacy benefit managers in America are all owned by the 5 big insurance companies. So when you pull back the layers to the onion, what you find is they've turned the PBM into a profit center. So rather than negotiating down the cost of prescription drug care, they negotiated up the cost. But why? Why would you negotiate up the cost? Because by negotiating up, they get rebates. We would call them kickbacks in any other business. And so essentially, I'll use a real world example. GLP-1s are hot right now. Everyone's talking about the price of Ozempic.
So before we get into that, so this sounds like fraud. Any other industry, this would sound like fraud. So they own, the top 5 companies own the business that was created to argue on your defense and get you cheaper drugs and medical care. So they purchased them. So now they work for the people who are providing the actual medical care. So they own the people that they're supposed to be negotiating with. That is collusion. That would be illegal in most industries.
Ozempic and how it's so expensive, it's egregious. Roughly 30% of the cost of every prescription drug is because the 30% kickback is going to a PBM. So if Ozempic's $1,000 a month, $300 a month are going to the pharmacy benefit manager via a kickback. It's a pay-to-play system.
So who pays? The drug maker pays the pharmacy?
The drug maker pays the pharmacy benefit manager the $300 per month in order to be placed on a preferred contract with the insurance company, which is the PBM. And it's so staggering. Let's talk about United Healthcare, since that's the CEO that was, unfortunately assassinated. If we break down United Healthcare, they generated $373 billion in revenue last year. Okay, 60% of that revenue came from their pharmacy benefit manager, a holding company that nobody knows about. The general public, our politicians, they don't understand this and they don't get it. And
Are the profit margins high in that business?
The profit margins are not as high as big pharma, but there's a lot of levers that they're pulling to hide their profits, right? And you can make, there's liars, there's damn liars, and then there's statistics.
Yeah.
These guys are using a lot of levers to hide their profitability. And so a lot of the profitability is held at the pharmacy benefit manager holding company. And so they can artificially dilute down their profitability on paper. But as an industry, the health insurance companies, and I said this on Rogan, they are the hidden juggernaut that nobody is seeing. Everyone's saying big pharma, big pharma, big pharma. Big pharma did, I think, $600 million. And you look at these big insurance companies, they did 2.5 that in revenue, 2.5 times that in revenue. They did $1.5 trillion, north of 1. They're projecting that they'll do $1.9 trillion in revenue by 2029.
So can we?
So he meant to say that the pharmaceutical companies did $600 billion, and the pharmaceutical companies are doing business in the trillions. But going back to what he said before, so the kickbacks are if I'm giving out insurance, if I'm a insurance company, I provide insurance to people. So I make money on the front end, I make money on the back end, I make money everywhere. So you're going to pay me every month as the person that I'm insuring. You're going to pay me every single month a premium, and it ain't a cheap premium. Then on the other end, we have the drug maker. The drug maker wants me to provide access to their drug, so they're going to pay me a kickback. So every time I sell their drug, or that sounds illegal. But every time I authorize payment for the drug, or every time it's prescribed to a patient and I allow access to the patient to have the drug, they're going to give me, let's say, $300. But I said the drug costs $1,000 because I get to set the price. But the drug is not $1,000. The drug may be let's just say $500. So I'll get the money every month from the person I'm insuring. I'll get $300 back from the drug manufacturer, and then you still have to pay a copay. So you're going to pay your copay. So you're going to pay into the $500 it is, or whatever. I'll tell you it's $1,000 and you only have to pay half. So you pay half of $1,000. That's $500. So I get $500 on top of your monthly premium. And so let's say your monthly premium was $300. I now got $800 out of you. I got $300 out of the drug manufacturer. So that's $1,100. And let's say the drug was $500. I now made $600 that month per person was used this drug.
Not to my personal ignorance, I should just say, I don't know. I don't go to the doctor. I don't know what my health insurance plan is. I just have no, once the COVID thing happened, I was like, I'm not going to the doctor. And I haven't. So I'm a little bit out of it. I'm not as knowledgeable as most Americans on how exactly this works. Can you walk through the average person's experience of health insurance and medical care?
Yeah.
So let's say I'm a 40-year-old woman. Women go to the doctor annually. I think most do. So they use the doctor more. How much is this person paying for insurance? Where's that money coming from? What's the experience like?
Yeah. So the average American, because of our food and our diet and our lifestyle, 90% of chronic disease is driven by lifestyle. If we peel back and look at what's causing these chronic diseases and get to the root cause, it's not just diet, lifestyle, and nutrition. It's that the system is failing Americans. Again, there is no safety net anymore. Your clinician doesn't have the time to do a deep dive. So the cancer that develops in your 40s started in your 30s. The diabetes that develops in your 40s started in your 30s. The chronic disease that hits you in your 50s started in your 40s. If we got proactive and predictive, we could prevent chronic disease. And chronic disease is killing 1.8 to 1.9 million Americans a year, more than every war we've ever fought since the history of this country. That's how staggering this is. Like you and I were talking before we got on this, the equivalent to a 747 jet worth of people are dying every day of opioid abuse. Deaths of despair at an all-time high, greater than that of the Great Depression. Suicide, all-time high. All of these things are through the roof. We are chronically ill as a society. And if we look at the pillars of what's causing that, one branch is the big pharmaceutical industry.
Yes.
Another branch is the food industry. But the other dirty branch is the insurance companies. They are implicitly involved in this. And I'll show you how and why. So the reason I know all this is because I was a drug rep. And then I was a medical device rep. And I stood in surgeries with some of the best and brightest minds in the country. And from there, I owned labs and pharmacies that attempted to bill and work within the insurance framework. So if your grandmother were to come in and try and fill a medication, the average American's on 4 or more prescription drugs, which is just mind-boggling in itself. 4 or more prescription drugs is what the average American's on.
Average American.
Yes.
So like I'm 55. Would that apply to my age group?
Yeah, 100. This is all age groups. The age demographic, I think 18 to 70 something years old, we're on 4 or more drugs on average, which is mind-boggling. If that doesn't tell you that there's something wrong with us and our system and our food, like we've got to wake up and realize somebody has to say the emperor wears no clothes. Like it's terrifying. So I love using the example of metformin because it's a very simplistic number that I can show you. If you come into a pharmacy and you tell me you have United Healthcare, I have a gag clause as a pharmacy owner. It is illegal for me to tell you that I could sell you your metformin for cheaper than what the insurance is charging you. But you paid for that insurance coverage. Why can't I disclose to you that I can give you the product for cash cheaper than your copay? So you come in, I swipe your card. Metformin cost me, I'm going to use ballpark numbers, roughly $2 for a month's supply. I would have sold you the metformin for $4. I'm not allowed to tell you that. I swipe your card. It tells me to charge you $10. That's your copay. So I charge you a $10 copay. Me, the pharmacy, I don't get to keep that money. Who takes that money? The pharmacy benefit manager. They pull that money out to their holding company and they get the additional $7. They short pay me. I don't even get what I would have made if I sold it to you for cash. They're an unnecessary middleman. And when they say they're negotiating down for the behalf of the people, that's just not true. So I'm going to methodically walk you through. What I like to tell people is the margins are made in the mystery. When people say, why is it so confusing? Why can't healthcare be more transparent? How do I not know what I'm going to pay? All of that bullshit is because of these insurance companies. It's because of United, Cigna, Aetna, Blue Cross Blue Shield. It is a system built to monopolize and profiteer off of your sickness. There's more money.
So this is not the first time I've heard this. I've heard this from pharmacists before, that it is illegal for them to tell you that it is cheaper for you to sometimes pay out-of-pocket cash. This happened to me when I went somewhere and the medical card that I had, it wasn't working. So they ended up giving me the medicine for cheaper than what I would have paid if I had the correct card with me at the time. So if you're keeping up, you go in there, you want to buy, like you said, metformin. Metformin is, I want to say, a statin for high cholesterol, I believe. So you go in there and the drug is actually $2. That's their cost. They're going to charge you $4 if you buy it out of pocket, but your copay for the drug is $10. So they're not upcharging you, but they're the PBM or PMB is a PB private. I've never heard this term before today.
The pharmacy benefit manager. They pull that.
Yeah, I had it right the first time. The PBM. Yeah, okay. So the pharmacy benefit manager, the PBM, sets the price. So they set the price they might set the price at $20. And this person's copay is $10. But you would have gotten $4 as the pharmacy. I would have got $4 from you. But now you're going to pay me $10. They're going to keep the majority of it, and they're going to send me back some money. So they're going to send back some money to the pharmacy, but not the $4. They're going to get like $3 at the pharmacy. And then the PBM keeps the we call it spread in stocks or something, but they'll keep the difference essentially. So they make all the money. The pharmacy loses out. The person paying for the drugs loses out. The actual person who needs the care is losing out. The only person that wins is the big company, the big insurer, and the big PBM. Or the big company is going to win when the PBM wins because all the big insurers have purchased the PBMs.
Money out to their holding company and they get the additional $7. They short pay me. I don't even get what I would have made if I sold it to you for cash. They're an unnecessary middleman. And when they say they're negotiating down for the behalf of the people, that's just not true. So I'm going to methodically walk you through. What I like to tell people is the margins are made in the mystery. When people say, why is it so confusing? Why can't healthcare be more transparent? How do I not know what I'm going to pay? All of that bullshit is because of these insurance companies. It's because of United, Cigna, Aetna, Blue Cross Blue Shield. It is a system built to monopolize and profiteer off of your sickness. There's more money in you being sick than in you being well. And so most of the insurance companies' profits come from you being on prescription drugs. So they obstruct your ability to get surgery because that's a loss leader. They don't want you getting surgical procedures. They don't get a kickback on that. Really? They want you on medicine. There was an article 2 days ago. They're finally talking about how much the big insurance companies were involved in the opioid crisis. Let's look at that. If you look at a product like an opioid, as a compounding pharmacy like mine, we had non-abusive, non-addictive pain creams. We could have prevented the opioid crisis by not prescribing an opioid in the first place. But when the FDA allows opioids to be rammed into the marketplace because the head of the FDA went to go work for Purdue Pharma 18 months later after giving them the goose that laid the golden egg, a label that says these are non-addictive, non-abusive, when they never had a human safety study on that.
Now, the FDA says what drugs are safe and acceptable for the American people. So the person who's at the top, and this happens most of the time, they're at the top, they let these drug companies do whatever they want, and they normally end up making a lot of money, and they end up employed. After they leave the FDA, they know that they have a big paycheck waiting for them on the other side.
How can they do that? They daisy chain this drug into the marketplace. It's a lot to digest. So sorry, I'm trying to explain it very complex.
I don't know how I missed the fact that the head of the FDA went to work for
18 months later, took a big salary job. And it had, I think in the last 40 years, only 2 heads of the FDA haven't gone to work for industry. Then go over to...
Wait, so Purdue Pharma, to be clear, was basically just OxyContin.
OxyContin.
That was, I mean, they didn't have like an entire...
And what happened is what happens so often in big pharma. When they say pharmaceutical companies innovate, and that's why they make all this money. Okay, the United States pays for makes up 60% of the pharmaceuticals industry's profitability. But we're ranked 40th overall in healthcare outcomes. 40th. We have a train wreck healthcare system. Again, 4 or more drugs the average American's on. The pharmaceutical companies are not fitting the bill for the research and development. We, the taxpayers, are, because we fund the NIH, and the NIH does most of the early product development. Then they sell the patent to the pharmaceutical companies for pennies on the dollar. Pharmaceutical companies pick them up and use their relationship and lobbying power with the FDA to bring these products to market. Okay, so there's that. The other thing the pharmaceutical companies do that is not innovative and in a way to extend their revenue streams and maximize profits is they refile patents by changing subtleties of molecules or delivery mechanisms, and they get additional patents that make it impossible for a competitor to come into the marketplace. That's exactly what happened with Purdue Pharma.
So what happens is you create a drug, or a drug is created, you put a patent forth on the drug so nobody else can make that drug for, I believe it's 20 years a patent lasts. So after the 20 years is up, that's when you can start to get the generic version of those drugs. And that's when, you know, any pharmaceutical company can then make the same drug that you make. But as long as the patent is there, you're the only one that can provide it. As long as you're the only one that can provide it, you sell it for a lot of money. You sell it for way more than what it's worth, as opposed to, because there's no competition, you're the only show in town. So if I'm the only one that has Oxycontin, you're going to pay a lot for Oxycontin. But if other people, because it doesn't cost that much to make these drugs, especially in mass, so the prices are artificially set. So it's really a supply and demand. I'm the only one with the supply. You are demanding it, so you're going to pay up here. Nobody else can give it to you. I'm the only show in town. So that's how that works.
Pharma's delivery mechanism, the cotton system, was going to expire. They were making millions, hundreds and hundreds of millions. They panic. They say, what do we do? They scramble to find a different opioid that they could plug into the delivery mechanism. They found Oxy. But the problem with Oxy is it is 8 times more addictive than hydrocodone. They knew this. They knew it. They knew it 100%. And they put it in the drug, and they put it into the marketplace, and they met with the head of the FDA in a private hotel for weeks in advance, and they pushed it into the market, and the FDA gave them the golden goose. They put that this was less likely to be addictive or abused than other opioids, which was a bold-faced lie, and then that individual went to go work for Purdue Pharma 18 months later when they left the FDA.
That's shocking. Yeah. Shocking. Without privacy, there is no freedom. Unfortunately, you don't have much privacy in this country.
These healthcare costs, but the real costs are paid in human lives. People like my brother, who got addicted to opioids and lost his life because the system chewed him up and spit him out and let him down.
How did he get addicted to opioids?
He had an ACL surgery in high school, like so many kids, and the insurance companies are incentivized to prescribe opioids. That's the article that came out the other day, and that's what I'm trying to explain about the danger of these prize when you die of the average American chronic disease.
So I think what's changed, and this is maybe something that it's taken me a while to figure out maybe it's all right now, because I do think of health insurance that way, just as I think of collision insurance or fire insurance. Had a fire, used insurance, we're great, that's it. But the addition of chronic disease to America, where the majority of the population has a chronic disease, that means that it's not catastrophic coverage. It's a maintenance program that you're paying for.
Correct.
Okay.
And the challenge is every safety net throughout the system has been captured. And that's why I think the corporate capture narrative is so important. And that's what I was trying to get through to the Senate. Everyone talks about the speech that Eisenhower gave about the military-industrial complex. People forget there was a second half to that speech. It's very rare. Bobby Kennedy is actually the only person I've ever heard talk about it. And I was so excited when I heard him talk about it because I'm like, finally. And the second half was, if we allow corporate interests to capture our scientific community, then what we will find is we will lose the garage tinkerer. We will lose the innovator. We will stifle and suppress innovation, and everything will turn to basically profits and a profit-driven system. Show me the incentives, and I'll show you the outcomes. We have built a system based on quarterly profits and quarterly earnings throughout the system, whether we're talking about the pharmaceutical industry, the big health insurance companies, the hospital systems, the doctors' practices. Everyone is built into this ecosystem that is attempting to capture human lives and monetize those touch points. So everything that you do is a revenue generator for all of these various entities. And there's so much money being made off chronic disease. There's no interest in curing chronic disease. And so the National Institute for Health, like I said earlier, they are the seed essentially that grows into the tree, and they're the ones doing most of the innovation and early development of drugs, but they're doing it oftentimes through incentives that incentivize them to look at treatments rather than cures. And so the problem is we're just launching Band-Aids into the marketplace rather than healing the wound. In medicine, we say, if you're...
So Chris Rock once said that, he said that many, many years ago, the money is in the medicine, it's not in the cure. If we just provide you with medicine, we can have a lifelong customer. If we cure you, we might get 1, 2, 3. We're not getting much out of you. So the money is in the medicine, not the cure.
To treat chronic disease, you have to uncover the root cause. And I'm telling you, the root cause runs deep, and it's insidious, and it's dark, and it has captured our entire healthcare ecosystem front to back, from the food we eat to the way we grow our food to the way we process our food. Big tobacco captured most of the food industry in the 80s. They literally owned the food industry and brought their marketing campaigns and strategies to the food industry, where they made food more addictive, more processed, and more chemically laden. And so throughout that process, now you're eating the wrong foods, and you're getting chronically ill at a disproportionate rate. The preventative care was the way to prevent that, and now those doctors are out of that ecosystem. So now you're essentially getting pushed into chronic disease, where then the insurance companies monopolize and profiteer off of it for years, and then your employer and the American people and the taxpayers are who are really fitting the bill for all of this.
With Donald Trump returning to the White House, this country has a unique opportunity, maybe our last org/Tucker. How aware do you think health insurers are of the system that they preside over? Like, do they understand what's happening?
Absolutely. They know, they were knowing and willingly active participants. They know, I mean, United Healthcare implemented an AI algorithm that rejected 90% of claims inaccurately. 90% of Medicare claims for surgeries were getting rejected inaccurately. right? Which drove up their profits. They're having double-digit profit growth right now. When you asked about how profitable they are, for the last like 5 years, they've doubled their stock price. So you also got to not just think about monthly, like it's revenue and profits, but it's also what is your shareholder return on investment and what are your stocks doing? And if we look at that, guess who owns the majority of the big 5 insurance companies?
No.
BlackRock, Vanguard, State Street. Guess who owns the majority of the pharmaceutical companies? It's BlackRock, Vanguard, State Street. Guess who owns the majority of the media outlets? It's BlackRock, Vanguard, State Street.
Yes.
Do you start to sense a trend here?
I do.
And guess who funds and lobbies?
Those 3 companies pretty much own everything. Everything. The homes, everything.
It's more than anybody, the pharmaceutical industry, followed by, one of the top players is the health insurance industry. And then you've got these big conglomerates that are funding all of this. So there's so many levers we can pull to generate revenue off of these individuals that it's staggering. Yeah, and so they absolutely know, and it makes it very, very hard. There's no alternative. Like if I'm a hospital, I can't afford to lose Blue Cross Blue Shield. I can't afford to lose United Healthcare. I'm out of business. Like in the state of Texas, Blue Cross Blue Shield is 30% of your revenue. So I'll tell you a real world example. I owned a pharmacy, and I still do own pharmacies, but I don't take insurance. Like our model now is we refuse to take insurance because if I don't take insurance, I can tell the patient the real price. I can get rid of all the games.
So a quick aside. So he said that I just want to give an example on the scope of how big BlackRock is. And BlackRock is just one of the 3 companies that he named, but these are the 3 companies that pretty much own the world at this point. So you got BlackRock is the world's largest asset manager. They have $11.58 trillion in assets under management. They are the biggest in the world. So they pretty much own everything. and their incentive is profit. They're private equity. So private equity, their job is to invest and get the most profits that they can possibly get for their shareholders and for themselves. So, so they benefit off of healthcare, disease, the food industry, housing. You can't, in a capitalist society, you can't really ban them. But however, they have way too much power. I don't know if they should be broken up. Maybe you shouldn't be allowed to own as many things. Maybe they should have to be separate companies. So they'll have like antitrust things when Microsoft gets too big and they force them to break off into different companies. Maybe that's what we need with State Street or Vanguard or BlackRock, because they are way too powerful. They own way too many things. They have too much money. They are able to lobby and spend so much money to get certain things passed. They are not in the interest of the average American, but it is in the interest of them and their profits. So while we wait for that, so my doctor that I went and I researched and I went through a lengthy process to pick the doctor that I wanted, and I had a different insurance. And when I got my new insurance, they said that they don't take that insurance, and I didn't really understand. I would kind of blame them, like, why the hell won't you take this insurance? I heard this is Blue Cross Blue Shield is an amazing insurance. Why won't you take it? So now, watching this and watching the other videos and learning even more about how they are stealing profits from the doctors, and the medical professionals, I can understand why I can't get the doctor that I want unless I pay out of pocket. And paying out of pocket is okay if you can afford it, but if you can't afford it, you can't afford it. And then also, if you do go there, if you do go, I can't go out of network, but out of network, they'll explain later if we watch that much of the video. But I could go there and I could just pay out of pocket, just pay cash, don't bring my insurance card. But if something is seriously wrong with me and I require additional care, it may get to a point where I can't afford it anymore. And also, I'm still paying my premium every month. I don't want to pay for, who wants to pay for a full doctor's visit as well as whatever panel test they order and then still pay your insurance premium. But I can't get the care that I want because of all these backdoor deals and profiteering going on. Keep in mind, so they own the companies, these three big companies. They own a lot of these food companies that put the high fructose corn syrup in there and tell you that you can. The same companies used to tell you cigarettes weren't bad and sugar is not that bad and they produce all of this junk food and tasty cakes and all of these things that can give you diabetes. So they make the food that then gives you diabetes, and then they sell you the insulin for your diabetes. They make money all the way around the board. And I've noticed that over the course of time. I don't know how it is where you guys are from, drop a comment down there. But I've noticed a lot of the private medical offices in my city are just disappearing. Disappearing. Those are the 3 Ds that I couldn't remember: deny, delay, depose. So when we go in there, if you go into the hospital, most people aren't paying the deductibles. I mean, some people are going to pay him. A lot of people are not paying the deductibles. So what he's saying is, you go in there. If he has a certain case and he's like, this surgery costs $50,000, the patient is responsible for $10,000 of the $50,000. Now, an insurance company is going to say that we have to get the $10,000 before we'll pay you anything as the hospital that performed the surgery. So now you have to go after the person to get the $10,000. If you cannot get the $10,000, they have the right to not, the insurance company has the right to not pay the place that performed the surgery the $40,000. So now the people who performed the surgery have $0. They haven't received anything from the patient nor their insurance company. And then if the place that performed the surgery decides to go and sue the insurance company, then the insurance company can then depose the place that performed the surgery, and then they'll find every single time that they were not able to get the copay the from the patient. And then, because the way the contract is written, they really didn't have to pay for whatever wasn't paid for when the copay wasn't paid by the patient in a complete manner. They can claw that money back at that point, because they're going to say that, well, we didn't have to pay you that money. You never received the copay money is written into your insurance. You have to receive the money from them before we pay, but we paid you and you didn't get the money from them. So we're going to take the money that we gave you back. So it really doesn't benefit you to sue them, because you're going to have a lot of claims, probably smaller claims that add up, that you didn't get the money back from the patient and you are still paid. But on one of these bigger things like a surgery or something like that, that's when you may have to eat the cost as the place that performs the medical procedure. All right, so that was that. You can finish watching this episode if you want over on Tucker Carlson's channel. But another thing about Ozempic before I get out of here is that Ozempic also comes with a lot of side effects, including cancer, thyroid cancer, as I discussed on a previous clip, is one of the side effects of thyroid cancer is one of the side effects of Ozempic. So, you know, you come here and we make money off of you taking Ozempic, and then we make money off of you needing chemo after you get thyroid cancer. You know, it's just money all around the board, and is at the detriment of the average American. So anyway, this video is pretty long. I'm Gary from fitnessfirstnutrition.com. Again, can you please like, comment, share, subscribe, and I'll see you on the next video.